Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. Noise in the jobs report, in the debate over whether plans for higher tariffs offset sky-high government spending. Yeah, it is one loud election, but there are just a few days left. We check in with one corporate leader who is moving forward whatever happens, ExxonMobil CEO Darren Woods.
We're not setting our capital plans based on an assumption about whether there's tariffs or not tariffs or how that's going to manifest itself and then the role that we would have to lower prices.
But emotions are running high in these final days before the votes are counted. How we get through it with author and podcaster Arthur Brooks.
The key thing is not letting it ruin your life. Is remembering what really matters is not the competition.
Plus, Apple and Intel speak to the street. Boeing hopes the third time is the charm with striking workers. And yes, people definitely still watch Jeopardy.
This is such a boomer update. It really is.
A boomer update.
People at home are...
What show? It's Friday, November 1st. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. It's a Friday. It's All Saints Day, the day after Halloween, and the markets are feeling a little bit up this morning.
First up today on the podcast, the October jobs report, the final bit of employment data before Election Day and before the Federal Reserve's interest rate setting committee meets next week on Wednesday and Thursday. And the report shows that job creation last month slowed to its weakest pace since late 2020. The impact of considerable storms in the Southeast, a couple of hurricanes, and the significant labor impasse at Boeing dented hiring plans across the board. The U.S. economy added just 12,000 jobs in October, far less than expected. The unemployment rate holds at 4.1%. This is what economists call a noisy report, very event-focused, and not at all clear if it's reflecting some fragility or weakness in the economy or if it's temporary. Wendy Edelberg of the Brookings Institution on our roundtable today.
The labor market is irrefutably slowing, and it is basically in the ballpark of what is a sustainable pace of employment growth, a stable, sustainable unemployment rate. The labor market looks healthy, perhaps a little weak, but basically healthy, and we've got inflation close to target.
But on the other side of the coin, the health of the U.S. economy and how we feel about it are among the top issues driving voters' choices in this year's presidential election. Economist Joe Lavorgna.
The reason the unemployment rate was stable is because civilian labor force shrunk over a couple 100,000. So this may not look like the great number or ex-hurricane that it's being portrayed.
Meantime, take a look at shares of Amazon. They have moved higher, a lot higher, about 6%, by the way. Earnings of $1.43 per share. It beat estimates of $1.14. Revenue also beating expectations. Ad revenue in line with estimates, and Amazon's cloud revenue growth 19%. That was the biggie. A lot better than a year ago, but still lagging the growth of more than 30% from Microsoft and Google's cloud business. CEO Andy Jassy saying the company's plans to spend about $75 billion on CapEx in 2024. He expects to spend more in 2025. He said generative AI is driving that spending. We saw similar things coming out of companies like Meta and others. Meantime, Intel shares rising. The company reported adjusted earnings of 17 cents per share versus an expected loss of 2 cents. Revenue also beat expectations. Let's show you CEO Pat Gelsinger on closing bell overtime.
When you look at the underlying business, great progress on products, on foundry, a beat and raise. So obviously the markets are responding positively, but our view is, we have a lot of work to do, and we had a lot that we got done this quarter. So a really solid quarter of execution.
And Intel's current quarter guidance coming in above analyst estimates.
It used to be if it bleeds, it leads. So this is how I would have done this story. But, this is GAAP. We don't always do GAAP. We do adjusted. But to be able to report a loss of $16.6 billion, which includes a lot of write-downs, for technology that's no longer any good, equipment, depreciation, all those things, as Gelsinger tries to turn the company around, that is the GAAP number, $16.6 billion. It's the largest loss in Intel's history. Revenue was also down, a 6% decline, but then the expectations for the current quarter were not as bad as people thought. So the stock, which was actually almost under 20, is bouncing a little bit this morning, but I don't know.
I guess the write-down was probably anticipated.
Right.
But not to that extent. The expected loss was $1.1 billion, and it was 16.6, so not that expected.
But no, expected.
No, I mean, we knew he's trying to do it, why did analysts? Why was the analysts expected fact set loss was 1.1 billion? So it was 16.6.
You don't know when they're going to take the write down, I guess. Was the
right? Well, that's a big number.
It is.
Jesus Christ. 16.6 billion. Boeing and its machinists union have negotiated a new contract offer, and the union is urging its members to vote for it. Phil LeBeau joins us now with the details. Hey, Phil.
Hey, Joe, let's see if third time is the charm in terms of Boeing and the machinists getting a contract deal done. Here is the latest tentative agreement and the one that the machinists will be voting on. The raise is now 38% over 4 years. Remember, the previous offer was for 35%. The very first offer was for 25%. They've also enhanced the 401k match that the company will make to the machinist union. And then you have a $12,000 signing bonus if you're a rank and file member once the contract is approved. They will be voting on Monday. Remember, during the last vote, which was a couple of weeks ago, 64% rejected the contract offer that was on the table. That was an improvement from the very first vote, where 96% rejected the offer that was on the table. So about 33,000 members will be voting. They'll vote on Monday. Yes, the union leadership is recommending that it be approved. They did that last time. They also put it in front of the members the first time, and they said, look, we think this is a good deal. Let's see if that matters at all. At the end of the day, it really comes down to economics, and we'll see if the enhanced offer is accepted by the rank and file. If you take a look at shares of Boeing since the strike started on September 12th, remember that this has cost the company an estimated $1 billion per month. And we're coming up on that second month when we get to the middle of November, where they have not had production for the 737 MAX and the other aircraft that are made out in the Puget Sound area. Yes, they have raised about $24 billion in capital, so they have shored up the balance sheet to a certain extent. But they lost $6.12 billion in the third quarter. They need to get this wrapped up. Kelly Ortberg has been very clear. This is priority number one. They worked with the acting labor secretary and the union in order to get this done. Let's see if they cross the finish line on Monday.
All right, very good, Phil. It's taken forever, but I guess it could be worse.
Is this the best and final offer, you think, Phil?
We've heard that before.
We have heard that before.
I think it's pretty darn close. It's pretty darn close. Look, that $12,000 signing bonus, Becky, I think that may be the sweetener that finally gets the rank and file members to say,
that's what I was thinking,
we've been out of work since mid-September.
Here's a big chunk of cash
I'm
now.
I'm ready to go back.
Yeah. Right.
Mm-hmm. Looks like the market's thinking that anyway, I guess. All right. Thanks, Phil. Sony Pictures Television is suing CBS Studios, accusing it of leaving millions of dollars on the table in the network's distribution of game shows Jeopardy and Wheel of Fortune. The suit claims that CBS has made more than $1 billion in profit from a distribution agreement which goes back 35 years. I'll remember Merv Griffin, this is a Merv Griffin entity, isn't working aggressively enough to maximize revenue from licensing the show to local TV stations and selling ads. It said CBS projected flat to 2% growth in licensing revenues year after year, but when Sony became concerned and got involved in some negotiations, licensing fees immediately grew 17%.
Sorry, this is all we can get.
I can speak to this just because I do see it a lot, but two totally new hosts. One is one of the smartest people in the world, and it's kind of fun watching Ken Jennings because there's times when he gets really annoyed with the three contestants because he knows every answer that that he says, he already knew. He doesn't even need someone to tell. He's like weird.
Alex Trebek always did too because he had the answers on the cue.
He had the answers. Ken really does know. I think from what I can tell, he's a strange guy. And then Ryan. Is Ryan not good? Is there anything he's not good at? Ryan
I still think Faber for the Jeopardy job. Just saying.
He was good.
Actually, he was really good.
Shout out to David Faber. I thought.
I love.
He knows. I
love Faber. Ken Jennings deserves that. They tried Maya, whatever her name was, and people were like, please. And then Ken got the job full time. But two major changes in the shows are, and you know what, Vanna's hanging in there, looks great.
She's actually.
She's a phenom. I can't see. I told you, Boomer. This is such a Boomer update. It really is.
A Boomer update.
People at home are
What show?
Talk about this, some Starbucks news for you. Starbucks Chairman Emeritus Howard Schultz weighing in on the performance of new CEO Brian Niccol in a LinkedIn post. Schultz said he was very impressed with Niccol's grasp of the many facets of Starbucks and the issues facing the company. He said he's heard from many partners who are inspired by the Back to Starbucks call to action and strategy, and he's looking forward to, quote, following the journey. Shares of Starbucks roughly flat for the week on the back of earnings. Of course, they basically threw the kitchen sink in and said, give us a year, we'll call you. But I think that a lot of folks that I heard from Brian Niccol, a lot of folks that I heard about Brian Niccol yesterday after the interview that we had done were very impressed just with the concept of trying to get back to those things. Obviously, it's going to be complicated because we talked about the mobile ordering piece, and if you do simplify the menu, certain sort of high margin products, but if you can actually fix the throughput piece, and that's really the whole game for them, it can actually change it.
He's an operator. You could hear that with his planning. You're going to give him time, and I think people obviously have some faith in him based on what he's done already.
Totally.
Cheese will be next.
Coming up next on Squawk Pod, ExxonMobil CEO Darren Woods.
We're seeing record levels of demand for oil, record levels for demand for products coming out of refinery, petroleum products. But we also see a lot of supply in the world right now, and a lot of that supply is coming out of the U.S.
What that means for pricing and how the leader of one of America's biggest companies is thinking about the vote next week, right after this. Welcome back to Squawk Pod. I'm producer Katie Kramer. We're in the thick of election season, but we're also in the thick of earnings season. This next conversation is a bit of both. Energy giant ExxonMobil reported its quarterly results this morning. One recent headline about the company, a lawsuit from the state of California over plastic products the company says it makes from recycling and how effective that is in addressing a broader environmental crisis. Exxon is the world's largest producer of single-use plastics. The Golden State's Attorney General Rob Bonta spoke to us about the suit back in September.
Let me be clear about this. This case is to hold ExxonMobil accountable for their actions. They have hurt California and Californians, billions of dollars worth of damage to our environment, to our people, and their answer in their statement is to point the finger at California, the people that they hurt.
Energy, prices, policy, a big touch point this election, especially across the opinions of corporate leaders supporting either Vice President Kamala Harris or former President Donald Trump. Even for New York Jets owner, Chairman and CEO Woody Johnson, he was an ambassador in the Trump administration. Johnson spoke to us on Squawk Box today.
Why do you support Trump if all those things are true?
Well, I think inflation is going to go down dramatically.
Why? With the tariffs.
Well, this country runs on energy, number one. I mean, it's always been an energy-based economy. Lowering energy prices, which I think he will do. He says he's going to do, and he can do.
So that's a little context. Now, let's get back to our Becky Quick.
ExxonMobil reporting in the last hour, earnings came in at $1.92 a share. That was 4 cents better than the street was expecting. The oil giant saying that it achieved its highest liquids production in over 40 years with 3.2 million barrels a day. Cash flow from operating activities during the quarter, $17.6 billion. And joining us right now to talk about it is Darren Woods. He's ExxonMobil's chairman and CEO. Darren, the stock right now up by about 2%. I think what's maybe key in this is a lot of the earnings growth, the earnings power came from what you've been doing internally at the company to try and streamline operations and improve operations.
Yeah, thank you, Becky. Good to see you again. You're right. You know, the transformation the organization has been on over the last 8 years is really beginning to manifest itself. It has been for the last several quarters. And as the commodity cycle goes up and down, I think we're going to continue to see the benefits from the work that we've been doing. If you look across each of our businesses in the quarter, by the way, this quarter, third quarter, is one of the best third quarters we've had in the past decade. In the upstream, we see record volumes coming from our advantaged assets like Guyana and the Permian. As you mentioned, we had the record oil production, or at least oil production, the highest we've seen in the last 40 years. If you look at the earnings per barrel that we're getting out of the upstream business, it's doubled since 2019 on a flat price basis. So take the market out of it, we've doubled the earnings power of every barrel we produce in the upstream. Similarly, in energy products, if you look at the profitability of that business, we've doubled that versus 2019 on a constant price basis. Our specialty business, the year-to-date results are a record. Chemical business, we're up $1 billion versus last year. We've cut out over $11 billion of structural cost out of the business. And in the new businesses that we're forming, the low carbon solution business, we're seeing real success there. We've got the only world scale carbon capture and storage system on the planet, and we've got 5 contracts to store CO2, close to 7 million tons per annum. We are continuing to progress the world's largest low-carbon hydrogen facility, and we've got a real first-mover advantage in the lithium business, where we're trying to implement a new technology and establish a new value chain for lithium. And so a lot of hard work over the last many years beginning to manifest itself in some real wins with respect to the business performance.
Meantime, if you're looking at the broader economy and the broader energy picture, we have seen a little bit of an oil glut, I think. Oil prices down 10% over the last 3 months. What are you seeing in the world, both in terms of oil supply and oil demand?
So I think if you look across all the products that we're producing, but in oil in particular, we're seeing record levels of demand for oil, record levels for demand for products coming out of refinery, the petroleum products. But we also see a lot of supply in the world right now, and a lot of that supply is coming out of the U.S. and the unconventional developments that we have here in the U.S. And so it's basically a supply-driven price environment right now. Demand looks pretty healthy as you look across the businesses. Similar with our chemical business, we're seeing very strong demand in chemicals, but at the same time, a lot of supply, a lot of capacity has come on to meet that demand. And so, frankly, like these capital-intensive commodity businesses, it's the supply-demand balance that ultimately is going to determine price. Demand looks good right now, supply's in excess, and so prices are low. But as the world continues to grow, we'll grow out of that supply, and we'll see prices rise when that happens. Well, and we got to remember, in the upstream and the oil business, it's a depleting resource. So every barrel you produce, there's one less barrel in the world tomorrow. And so that depletion curve eventually catches up to the demand side of the equation as well.
So, Darren, there's been a lot of talk. We've got an election next week. And ahead of that, the markets have been trading energy stocks down to some extent, just on the idea that if Trump wins, you're going to be looking at a drill, baby, drill environment, and that is going to mean lots of supply, and that in turn could bring energy prices down. What do you make of that? You've got a lot of cash, more than $26 billion cash on hand. Would you use that to increase production if you could, or are you meeting the production you need right now? We're just trying to figure out what happens, because oil companies, the oil majors, have been pretty disciplined to this point. But you're right, we've seen a lot more production in the Permian and beyond.
Yeah, I think, Becky, that frankly, our industry as a whole, and certainly our company, has been very focused on making sure that every dollar that we spend is productive and that we're getting a good return for that dollar invested. And that's, frankly, what's driving the investment levels that we're pursuing. And I also think, frankly, that's what's driving the investment levels of the industry as a whole. So it's less about overcoming restrictions, external restrictions in the system, and it's more about making sure that the technologies you're deploying, the approaches, and in your investment and activity level is being done in an effective and efficient manner, so you generate returns for your shareholders. And I think that tends to set the level, and certainly we wouldn't see a change based on a political change, but more on an economic environment.
So Darren, can you help us with this, though, just because you just said the external restrictions, you think, I don't want to put words in your mouth, would not affect things. And the reason I'm sort of keying in on that is we just had Woody Johnson here, and one of the arguments he was making in favor of a former President Trump's economy, if you will, is that if there are tariffs, the thing that's going to balance off or try to make up for it on the other end is a lot more oil at much lower prices to try to offset whatever you believe the inflationary effects would be. So can you comment on that?
Well, when I said restrictions, Andrew, I was just saying today I don't think the level of production in the U.S. is being constrained by external restrictions. I think it's being driven by what I'd call is the internal discipline of the industry and our company in terms of making sure that the money that we're spending generates the returns. And I think as we move forward, whatever policies get in place, put in place from either administration, depending on how the election turns out, that if that has an economic consequence that then leads to price signals in the market and structural shifts, I think you'll see the industry respond to that based on what those signals dictate. So it's not a function of, I don't think there's anybody out there that's developing a business strategy to respond to a political agenda, quite frankly. I think that would be a very difficult task.
I appreciate that. The reason I'm asking is, it sounds to me like if you're saying this is really a story of economics, it's not about the politics of it, that ultimately it may be very hard to actually get oil prices to be meaningfully lower to offset those tariff, the inflationary effects of tariffs. And I'm trying to understand if I'm misunderstanding that.
Yeah, I don't, as we're looking at the business, Andrew, we're not setting our capital plans based on an assumption about whether there's tariffs or not tariffs or how that's going to manifest itself and then the role that we would have to lower prices. I said at the end of the day, again, and I think this is true for everyone in industry, we're making those decisions to invest based on the returns that we think we can generate for our shareholders, the value we think we can contribute. I don't think that's frankly going to change. And the advantage of the unconventional business today, the business that's in the U.S., predominantly in the U.S. and growing, is the flexibility that the industry has to ramp spending down and ramp down activity to lower production if the market environment would suggest that is needed. And likewise, if the market environment gets tight and supply is tight and prices rise, I think there's the flexibility in industry to increase spending to generate returns. And that's ultimately what's going to drive it. And trying to calculate the derivative of a tariff onto oil prices, we have a hard time just calculating what oil prices are going to do based on the fundamentals. That third or fourth order math, I just don't think we're very good at.
I guess if you just simplistically look at it, Darren, though, there was a perception that there weren't a lot of new leases being allowed from the Biden administration, or offshore drilling was not happening, or ANWR, or think of, I can give you 10 bullet points that people that were critical of the Biden administration about how it was not conducive, not friendly to the oil and gas industry. They were afraid to make long-term capital commitments because Biden made that comment about putting fossil fuels out of business. And in a perverse way, that caused prices to go up to a point where it became very lucrative to continue to produce oil up at $70 or $75. Is it possible it could be easier, or there could be more leases, there would be more drilling activity, drill baby drill? Is it possible that would happen, and that if prices went down per barrel to 50, would that hurt the oil industry? And are we the swing producer now so that we could control global prices down to more than OPEC? Could we get it down to 50, or would it stay high depending on what the rest of the world does?
So I think the beauty of the U.S. market is it's highly competitive. Our industry is highly competitive, and so each of us will be making decisions based on the market incentives. And so it'll be a function of what your break-even cost is and the returns you're generating, what will drive the investment level and the amount of production that's coming out of the U.S. So the unconventional resource coming out of the U.S. is, in fact, the swing producer from the standpoint of it's very flexible and can come up and down. The difference is it's not a centrally controlled group. It's a number of businesses that are aggressively competing against one another, trying to bring their costs down and make it economic to invest the next dollar.
Drill baby drill could hurt the industry, couldn't it? If prices, drill baby drill could hurt the industry.
Your dumbest competitor.
Yeah, I'm not sure how drill baby drill translates into policy. What I would say is in the unconventional space, we haven't been constrained by access to acreage. I think the challenge there that frankly the administration has been working through is permitting on developments, but that's a piece that I think has not constrained the industry in the unconventional space. There are resources around the country and in the Gulf of Mexico that haven't been opened up and access isn't as available as it could be. That could, for the longer term, open up potential sources of supply. But in the short term, the medium term, it's really an unconventional story. And frankly, that resource base today is available to the industry, and it's just a function of the economic development. So I don't see, and then ultimately that'll be, as that industry continues to grow, or as production continues to grow, it'll be permitting for pipelines and takeaway capacity that could get in the way. But today, I think the industry is in a pretty good position.
Hey, Darren, California sued ExxonMobil back in September. They alleged deception about plastics recycling. We had the California Attorney General here on set with us, and he said they knew and they lied when talking about recycling not being effective when it comes to plastics. Where does that lawsuit stand, and what do you think about it?
Well, I think the Attorney General's agenda was made pretty clear to anybody that was watching your show when he was on. I mean, frankly, he didn't know what he was talking about. He came in with, I think, a very hollow set of talking points, repeated them pretty consistently, but I think obvious to everybody watching that he was more interested in sound bites than sound science, and a lot more interested in attacking our company than attacking the problem of plastic waste. I think if the Attorney General wants to do something for Californians and to improve the environment, he should work with companies like ExxonMobil who have real solutions that are necessary to solve what is a very challenging problem, and focus less on firing up his anti-oil and gas base to advance his own political agenda. And that's kind of how I see this playing out. They don't have a strong basis. The suit continues to be there. We're obviously going to fight that. But I think as we look forward to going forward and demonstrating that what our company's been doing in this space is actually trying to address what's a serious problem around the world, while we continue to maintain the really important benefits that plastics play in meeting the needs of people all around the world.
So you saw that interview, Darren, because at the end, he was like mad that some of it was going into jet fuel. He goes, well, it was going into jet fuel. I go, well, you came here from California, right? And he goes, yeah. And I go, did you fly? And he goes, well, yeah, I got to travel. And it's like, well, it's just glaringly funny. Jet fuel seems like a good use for some of it, right? I mean, we do need jet fuel globally.
So I think the points that's missed, and one of the real step-out advantages with the advanced recycling technology is the challenge with recycling today is it's mechanical. So you're taking existing products, chopping it up, and kind of trying to blend that back together again. That has a couple of problems with it. You can't, the modern plastics today, you can't do that with all those plastics. And then you have a degraded performance just based on mechanical properties of what comes out of that mixing and blending process. What we're doing with the plastics, we can take a much broader set of plastics. We're actually taking it back to the beginning of the process, and like we do with crude that comes into a refinery, breaking that plastic down back to its molecular components. And those molecular components then flow through our processes and come out in the products based on the weight of the molecules. And so you're basically reconstituting that plastics to its fundamental form and then bringing it back into the product value chain. So some of it could end up in petroleum products and fuel. Some of it will end up in the plastics. The real point here is that you are recycling that in its entirety and bringing it back into the system, and by definition, backing out virgin feed or additional crude. And so it is true recycling. And the big advantage there is you can do it with a lot of different plastics, and you get the same qualities and advantages of virgin plastic. So it's a step out technology. It's one that's going to be needed going forward, and something actually the Attorney General should be supporting rather than fighting us against.
I would say that, look, the underlying there is a major problem that only about 5% of our plastics are recycled. I think in the case of the Exxon plant you're talking about, it's more like 8%. So it's improvement over what we see on an average. But the underlying problem is we do need to recycle more of this stuff. And that is something I think that you are open to working on. How would you come at them? What should they be doing? What would you offer?
Yeah, absolutely. I would tell you we are actually today investing in upstream facilities to try to collect plastic waste in order to get it to our facility to feed. But you're right, Becky. The challenge with plastic waste, it's not plastic in and of itself, it's the disposal of plastic and waste plastic. And there are techniques available today that we could start collecting that more effectively. It's going to take government involvement. There's a responsibility here for the governments and communities to collect that waste so that it can be recycled. That is a big challenge. We're actually part of an alliance on plastic waste that we're working around the world to try to start to address this. And as I said, we're investing in businesses that will actually collect and process plastic waste so that we can feed it into the recycling process. And I think that's where we definitely believe that that's something that needs to be done and something that we want to work on.
All right, Darren, I want to thank you very much for being with us. We appreciate it. Darren Woods.
Thank you, Becky. Nice seeing you again.
You too.
Next on Squawk Pod, the United States of anxiety. Less than 100 hours until Election Day, Harvard professor and happiness expert Arthur Brooks tries to stem our fears.
We've gone through worse. We will go through worse. We'll have times of relative quiet compared to this, but America keeps going.
You're listening to Squawk Pod from CNBC. Here's Joe Kernen.
Stand by, Joe. In 3, 2, 1. His mic. Cue.
We are in the home stretch of the 2024 campaign season with voters heading to the polls on Tuesday. Joining us now for a look at the mood of the country ahead of the election, Harvard University's Arthur Brooks, American Enterprise Institute President Emeritus. He's a columnist for The Atlantic, a podcast host, and author of Build the Life You Want. Thanks for joining us.
Nice to see you.
And you point out
hanging
that
in there.
It is, we're almost there, and that the mood is, you would characterize it as somewhat dark, but we really should put it in perspective.
Yeah.
It's election. It doesn't directly impact our day-to-day lives like family matters and work matters
sure.
and everything else. So you need to keep it in perspective. But when I look at the big picture, I think of previous periods, Arthur, that periods of complete tumult followed by some really good periods
right.
of togetherness and a feeling of that the country is together. It's happened before. I don't remember the Eisenhower years, but I was close enough. I think I was born in that. And then I remember the 70s, the 60s, 70s that were so tumultuous, but then I remember the 80s.
Right. We go through these things. I mean, this is just the way that this works. And look, there are no elections that are not bitter. This is how competition works, and we have to keep this in perspective. We, as Americans, we're so lucky because we live in a culture characterized by competition, and we love it. The free enterprise system brings us wonderful things in innovation and what we talk about on Squawk Box. That's because of competition. In politics, we call it democracy. We don't want uncontested elections and 20-year runs with nobody actually running for office. And the cost of that is that we disagree with each other. I want more of this, you want more of that, and we duke it out is the way that it comes. Now, the key thing is not letting it ruin your life. Is remembering what really matters is not the competition, but what you go home to, which is the love of your family, love of God, the things that we really care about. Those are the non-competitive spaces. We can't let that get crowded out.
I mean, there are people that, like my son will tell me how bad certain things about the Reagan years. When I go, son, someone read a chapter.
Right.
They didn't
in a history book.
In a history book, and that's what they came. And maybe there were certain people, certain pockets of society that didn't do well. But as I remember the 80s and 90s and even the Bill Clinton 90s, that was a time that didn't seem like now. And I'm wondering if we ever really can get back to that with how crazy there's a lot of things in society are right now. And people have said the things that we used to think were awful are now accepted. Things that we used to were accepted, we now think are awful. It's almost upside down. Will that ever go back to normal?
That dynamic has always been the case, where things are turning upside down one after the other, and we look back with a little bit more fondness. There's a phenomenon in social psychology called fading affect bias. That's where you learn from the past, and so you remember it as better than it was. In the 80s, my parents, holy cow, I grew up in a left-wing household in Seattle, and my parents thought that Ronald Reagan was going to get Granny kicked out into the snow and get us into a nuclear war, and now those are the golden years.
It always depends on your perspective.
Yes.
If you were somebody in the 80s who lost your job, who got shut down in industries.
That happened happened in the late 70s and early 80s. After that, the market, everything went better.
But there was Iran-Contra, which was a real scandal. I mean, people felt really bad about it as the bottom line. Here's the thing for us to keep in mind. We've gone through worse. We will go through worse. We'll have times of relative quiet compared to this, but America keeps going. Markets keep working. Democracy keeps working. We still have our families. We still have these beautiful things, and everybody still wants to come.
I'm not
here.
optimistic for 4 years, Arthur. If it's Trump, there's going to be half of this country's going to be, I don't know.
Half this country's going to be mad either way.
And the other way, it will too. But half the country's going to leave the United States, supposedly, if Trump gets.
Yeah, but no.
But here's my question though. Is it different this time? What is the difference of social media and riling up the extremes on both sides and feeding you what you think or what you're predisposed to think, and then amping you up on whatever those thoughts are? Because you get some pretty crazy antagonistic feelings.
For sure. What's happening is that we're overdosing on information. So we're information binging. That's what happens when we have the screen in our pockets, not just social media, but the screen, which is ever present.
True.
I mean, watch TV in the morning, get it done, read the newspaper, and go on with your day. That's the healthy way to do this. And so the way that all of us can be happier, look, this is not unprecedented, the bitterness that we're feeling. America is actually going to be fine. The problem is, the cost of this is that the information binging is leading us to be less happy than we could be, taking it more seriously than we actually should, thinking that what's going on in Washington, D.C., that's really going to affect your life.
Can you explain this? If you look at some of these studies and polls, a decade, even 2 decades ago, 20% of Americans actually thought that whoever the president was mattered to them personally. Today, the number's like 60 or 70% in this sort of uniquely tribal situation. What is that people have decided? If 2 decades ago people thought the president, it's fine, whoever it is, I can survive. It's not going to change their life so materially, and now believe that it is going to change their life so materially, even though the statistics would suggest, I would imagine, or hopefully, that maybe it won't. Though I know with this particular election, there are people who genuinely believe it could change their life. And by the way, actually, maybe there's an argument to be made that actually it could change your life.
Very few people, that's the case. For the vast majority of Americans, what can change your life, not dramatically, but somewhat, is local politics, local action, what's happening in your community. And that's exactly what people are not getting involved with. So what happens with the ever-present media in everybody's face all the time is they start to believe that citizenship means being sufficiently outraged about what's going on in Washington, D.C. That's wrong. That's not citizenship. So what's happening is we have this information overload. So whereas 20 years ago, 30 years ago, 40 years ago, 20% of people would say, this really matters a lot, most people say, it's politics. I want one person to win. And by the way, in the 80s, people were really, really upset when their person didn't win. They just didn't see it all day long. And so they weren't being tortured by this constantly, being given this idea that if they don't pay sufficient attention, something might go wrong. That's what happens when you binge media.
But isn't part of what's happening?
But both sides have the things that they're most worried about. There's people worried about reproductive rights, and on the other hand, there's people worried that their cities are being overrun by people that are paying to live in hotels.
Right. And so it's actually where I was going to go with this.
And then there's crime
in a very interesting way.
With inflation, their paychecks don't go.
But that's where I was going to go with this. To me, the distinction, and maybe is that there is a greater impact on a very local basis. Meaning, if you are a woman today, that's a very local issue for you. And I'm not talking about state issues. I'm saying about that. That's a real issue that demonstrably has changed your life. Hold on, but the other distinction is taxes. So taxes impact your wallet.
Right.
It used to be that the debate was between 35% and 37% or 33%. I mean, we were talking about sort of marginal differences, right?
Right.
Now we are into a whole other landscape where the distinction between what people think is both acceptable and what one side is asking for and what the other side is asking for are like night and day. And that actually, I think, is a real thing to people.
Well, we got to keep this in perspective. People were really, really worried about abortion rights in the 1980s and 1990s. They absolutely were. And they were talking about it in the very same way, and groups were fundraising on this. They're going to take away your rights forever. That's how they were talking about it. Now, what happens is we tend to coalesce around certain sets of values and policies that most people want. Taxes. Taxes were wacky if you go back to the 1950s and 1960s with 90% marginal rates and crazy carve-outs, and if you had a creative accountant, you didn't have to pay it. And now simply what's going on is that we're going back. We've had this relative period of consensus around 37,
Arthur,
39.
10 cities in some of our greatest, formerly greatest cities.
Yes.
And in a drugstore, you need to ask someone to come over to open up the razor blades so that you take them. There is a lot of crime, a lot of...
There is, but if you're living where most people live around the country, the CVS is the CVS. It's the same as it was last year. Most people, what's going on, people are really upset because they see images of something far away.
So that's social media again.
Not just social media, it's too much of everything. Look, here's the deal. We're going to have an election. For half the country, it's going to be a bummer. For half the country, it's going to be a relief. Got it. What do you do today? Turn off media, go love your kids, call a friend, say your prayers, do the stuff that's always been there, that always should be there, because your life is your life, and then say, God bless America, where we can have these crazy elections and we can have these arguments, but no matter what, I've still got my family, I've still got my job.
For now.
You hope. Right.
Arthur, thank you.
Thank you.
Okay.
Thanks, Arthur.
Feel better?
A little, but I wish you'd stay the rest of the show.
Yeah, it's
and then come over and you got an extra room.
That's the podcast for today and for the week. It is finally Friday. And many states across the U.S. have early voting locations open this weekend ahead of Tuesday. Go to NBCnews.com/planyourvote to find information on where to go and when, wherever you live. NBCnews.com/planyourvote. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. You can tune in weekday mornings on CNBC at 6 Eastern, or get the best of our TV show right in your ears when you follow Squawk Pod wherever you get your podcasts. We'll meet you right back here on Monday. Have a great weekend.
We are clear. Thanks, guys.